we're discovering at $30 an ounce discovery cost versus M&A of 300, it's 10 times expensive. Nothing better than finding more ore right adjacent to your plant. So it provides us life, but also provides us growth in a world which is ex-growth. We're seeing that at the moment. We're seeing declining reserves globally, and we've got that in spades. Not only are we not just tracking sideways, we're continuing to build. So at the moment, it's a far better return for us. Opportunities, we're looking at M&A, but I'd say much more in a bolt-on around us, using existing facilities as opposed to doing stuff. And as I mentioned, we're the only one of our peers that's got a sole focus of all of our effort in a 200-kilometre radius. Is really important for us because, again, we can continue to invest heavily in that business without getting distracted by some of the other opportunities that are there, granted, but at the same time, we're getting a good return where we are.
I missed what you said also. Of the $154 million cash you got, how much is earmarked for exploration and what would the rest be for?
Zero is earmarked for exploration because we'll fund that entirely out of operating cash flows. So we will see our cash balance continue to grow despite another $50 million of exploration and despite another $120 million of growth capex into our business. So, and that's off a $1,600 spot gold price. So if you dial that up to $2,200 we're seeing at the moment, we'll be able to continue to build the balance sheet, continue to invest heavily in exploration, and be able to hit that flight to 400 mark by FY21.
Cool.
So in light of all those things, Raleigh, could you sort of strike a hybrid sort of system with your dividend, whereby you give the shareholders something?
Mm-hmm.
I mean, you've got no debt, you're not inclined to make big acquisitions, and you're still spending off extra cash for the current. Is there a thought that maybe you could give them, a very small dividend, and then you'd be more attractive to shareholders?
Yeah, sure. Look, and that's it's obviously very topical for us at the moment. We're about to come into into our full year accounts that'll be out by the end of this month, and we're looking to have a policy on dividends as part of that conversation. So now we've got our budget set, now we've got our flight to 400 plan out there, the reserves, all that's in part of the conversation coming out in the coming weeks.
I'm interested in the employee share plan.
Yep.
Which is great and sounds like a winner. I just would you say like a lot of the places where there's a looming skills shortage are actually more on the contract side? I imagine this doesn't apply to contractors.
No. Yeah.
How do you make sure you've got enough? For instance, drillers. Everyone's drilling deeper. Everyone's expanding their exploration budgets.
Yeah.
It sounds like there's going to be a real crunch in terms of drilling staff going forward.
Yeah.
How do you make sure you've got those people at your disposal?
Yeah, and that's obviously ongoing engagement with things like. It's not just around pay, but things like the conditions of camps. We've just initially commissioned an airstrip out at Carissa Dam, so they're not jumping on a bumpy road after flying into Kalgoorlie. So there's opportunities to enhance the conditions while they're on site. So we've done all those things, but also being engaged with the contractors. So we've got Burncut, who I think are right up there as one of the best going around as a partner over the long term. And it's continuous conversations with those guys, and they are the largest contractor in Australia. And this is a very large contract. So from our mind, we're happy being one of from a annual tonnage movement, being right up there. So obviously they're going to continue to prioritise our minds, which is great. But then we've got some smaller contractors. So for underground drilling, for example, we use AHD, Australian Underground Drillers. Again, one of the best going around. So again, a lot of effort during the tender process. That you're not necessarily paying the cheapest, but it's about trying to make sure that in AUD's case, I think they pay the guys well, but they've also got very good loyalty. So we haven't seen that yet. That could come. Of all the disciplines, I think the trades are my biggest area of concern. I personally spend a lot of time on the technical professionals, on the tertiary educated, but I think that trades is a massive area of focus. So one of the things we're looking at with these camps is saying, well, how do we get the trades people coming through? And I am a little bit concerned around the push towards the advertising of our wares from improving our image through things like automation. You see these ads run all the time. We're just got to be careful of the consequence of that, because it does imply there's robotics and AI and all these other things coming in that maybe we don't need these trades. And I can guarantee you we're going to need these trades for a long time ahead. So we need to make sure that we send the right message to say that those trades are really important, because we still need them into the future.
Are there any particular trades that you'd identify as really short?
I think that's general fitter and turner, particularly the mobile plant. That's an area of major concern. The other area that does worry me, we talk about construction, mining booms and busts, but we've had a construction boom. It's quite a big differentiator towards just a general mining boom. So that's what happened previously with the iron ore took off. What worries me about that is you need trades in both areas. And I think we're about to evolve into clearly another construction boom with what's happening in the iron ore space. So that's the area that does worry me, and how we, as an industry, manage that. Because again, we didn't do ourselves any favours the way we treated people, sucking them across from the East Coast and then quickly letting them go. So we just need to be a lot smarter about how we're doing that. I think the collective efforts of the MCA and CME is putting us in a better position for that.
Riley, what do you think a booming gold industry will do for the community? Like, you've obviously invested quite heavily in some community ventures. But what would you think the community expect from players like yourself? Yeah, I think a really good example, and this is well before the gold price has ripped as hard as it has been around the gold industry group's investment into Netball WA, which is the largest commitment to netball in Australia. It's a $5 million investment over 3 years, and I think it shows what can be done as a collective. I think if you looked in the past, we probably did lots of small things, sponsoring the old club here and there. I think what's powerful with that is it can get a lot more bang for buck working together, and there's no reason why we can't do things together. Another really good example is what we're doing with St Barbara, Goldfields, Anglo Gold, companies like that around the Leonora area, Laverton area, things like Shooting Stars. It's a really, really powerful thing. And as I mentioned during the talk, it's not just around the impact on the community, it's the impact on your people. Like, I've measurably seen people come back from these community events coming back with a grin from ear to ear, because it actually means a lot when they can actually contribute and put something back in, and they're getting a really good return themselves, which I think is a really good retention tool. Dare I say it? I didn't think that coming into it. Yeah, fantastic.